slight difference actually between 2020 and 2025, at least locally, not macro, like in terms of the overall move we've seen, but locally, the difference is that the 2-week rally and the 2-week dump, it ended the week of September 28th, right? So September 28th, Bitcoin still didn't go anywhere that week. And the problem is that that's the week we just started today is September 28th. So I know a lot of people are hoping that Bitcoin just lifts off this week, but considering it's only, we're still, this week is going to be sort of half of September, or the first half of the week is still going to be September. I just want to make you aware that, hey, if Bitcoin doesn't go anywhere this week and it still struggles at the bull market support band for a little bit longer,
Markets have a strange way of echoing themselves. Ben Cowen points out that Bitcoin's recent moves look almost like a replay of 2020. Back then, the pattern was clear. Bitcoin bottomed, bounced hard, chopped sideways, then sagged into September before ripping higher into the end of the year. This year has traced almost the same steps. A peak in August, weakness into September, followed by a couple of weeks up, a couple of weeks down. Lay the charts side by side and the resemblance is uncanny. But Cowen stresses it's not a perfect overlay. Context matters. 2020 was a post-halving year, when Bitcoin historically builds momentum. Now we're in a halving year, which changes the dynamics. Even so, the parallels highlight a familiar rhythm in how capital moves across assets. One striking similarity is Bitcoin's late summer weakness coinciding with gold's breakout. In both 2019 and today, gold surged to fresh highs, soaking up liquidity and leaving Bitcoin to bleed. That tug-of-war between the two assets seems to repeat across cycles. The divergence comes later. After gold's breakout last time, Bitcoin consolidated, then broke to new all-time highs. In the most recent cycle, the opposite occurred. Gold's strength coincided with Bitcoin sliding into a deeper Q1 capitulation the following year. Cowen's takeaway is that while history rhymes, it doesn't repeat perfectly. The setup looks familiar, but the eventual outcome could differ depending on how liquidity flows unfold this time. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
This week, or really I should say this month, ended up being a very similar month to what we saw in 2020, in fact. I don't know if any of you guys remember, but a lot of what we talked about at the beginning of the month was sort of the different outcomes that we could see, right? And we one of the main ones we discussed was how similar this year has played out to the capitulation we had in 2020. Now, I want to be clear, like while hopefully we can get another rally by Bitcoin in Q4, I wouldn't necessarily expect something as explosive as what we got in late 2020 and early 2021. But with that said, one thing to note is just how similar it has played out so far. And we'll dissect it a little bit more. We'll talk about some other examples as well. Obviously comparing a post-halving year with a halving year, it is maybe not the best way to approach things. But in other ways, if back in 2024, we compared it a lot to 2019. And one of the reasons for that was because in 2024, we saw gold breakout. When gold broke out, it led to this six to 7 month consolidation phase, just like we had with Bitcoin. And then, of course, we ended up getting a capitulation low in Q1 of the following year. You could argue that, this rally here was similar to, this rally here, right? Very similar things. The only difference is that in this cycle, it led to a new all-time high, and in this cycle, it did not. So it's not like it's completely far-fetched to make the comparison, but what's interesting is just how similar they have been. You have your capitulation low, you go basically straight up, recover to where you were before the capitulation, and then you go sideways, and then before tagging the 21-week EMA, you go up, sideways, local top in August, and then down into September, okay? And then once you get into September, you have 2 weeks up and 2 weeks down. All right, now, what you'll notice is that this year is almost a carbon copy, right? You go up, and then you get that slight bleed, but then you rally before Bitcoin hits the bull market support band. You put your local high in August, you go down to the bull market support band, you go up for 2 weeks, you go down for 2 weeks. So it's almost, right? It's almost the same thing, right? It's almost the exact same thing when you view it through the lens of that. The main thing you have to be aware of is that this bleed here by Bitcoin, right? That bleed there, let's make it a different color so it stands out a little bit more. That bleed is similar to the 2024 bleed. And both of those bleeds corresponded to when gold broke out to new cycle highs, right? So if you look at gold, you can see that when it broke out, really when it broke out into, when it broke out into this move right here, it was really this breakout down here. That's when it sort of led to a brief bleed by Bitcoin back in 2019. And then you can see over here, same type of thing, right? When gold really started to break out here, that was when it corresponded to that brief bleed by Bitcoin. The main difference is that the next move that happened after that period, that consolidation phase, in this cycle, it led to a new cycle high, right? You can pretty clearly see that it led to a new cycle high, but in last cycle, it did not, right? You still ended up getting your Q1 capitulation the following year, right? In Q1, Q2, and then everything since then has played out almost the exact same way. So very similar moves, right? Very similar moves.
Ben Cowen warns against drawing lazy parallels to 2020. The more accurate comparison, he says, is to other post-halving years. Every cycle so far, 2013, 2017, 2021, has seen its peak arrive in Q4 of the halving year. That track record matters. Many analysts are betting on an extended bull run into 2025, but history suggests caution. If the pattern holds, the market could top out sooner than people expect, and those assuming this time is different may find themselves blindsided when the cycle ends right on schedule. Another key detail is how Bitcoin tends to behave in September of these halving years. Cowen points out that both in 2017 and 2021, Bitcoin found its footing at the bull market support band, the 20-week moving average. The lows came in mid to late September, with price even dipping slightly below support before bouncing into the final leg higher. This year has tracked a similar rhythm. Bitcoin touched the 20-week SMA in late August, rallied for a couple of weeks, then gave back those gains and now sits back on that same support. If history repeats, that retest could mark the setup for the last major push of this cycle. Let's get back to the interview.
Is that we shouldn't just compare to 2020, because while it does look a lot, it feels very familiar, there's also something else we have to consider as well, and that's that it's a post-halving year. So a lot of times, now look, obviously there's people coming out and saying that the cycle will go on longer, but at the end of the day, you have to put some weight into the idea that the cycle top will just occur in the fourth quarter of the year, just like it did in 2013, just like it did in 2017, and just like it did in 2021. So while in 2020, it actually rallied into early the following year, I'm suggesting that might be a little too optimistic, okay? Now, there's a lot of people they're coming out and saying this is what's going to happen, and maybe they're right, but I wouldn't go into it as being the base case, because if you go into it being the base case and then it ends up playing out how it always has, then, come 2026, it's just going to be like, oh, wow, it happened again. Everyone thought it was going to go on forever, and this time is different. And then, by the way, it ends up actually not being different. So something to consider, right? Something to certainly consider. So what I think is important here is that, not just looking at 2020, but also looking at 2017, you can see that Bitcoin found support at the bull market support band. You can see in 2021, Bitcoin found support at the bull market support band. Now in 2017, Bitcoin found its low about mid-September. In 2021, it found its low late September, right? Late September. And if you zoom into it, you'll see that there was a low late September. And then the following week, the week of September 27th, the week of September 27th, it was a green week, but it did wick down again, right? So it wicked down one more time to that 20-week moving average. And so you ended up testing that 20-week SMA, right? You went below it 1 week, and the next week you wicked down to it again, and then it led into the rally, into the market cycle top. So what we've seen now is we've seen Bitcoin tag the 20-week SMA in late August and early September. It got the 2-week rally, it got the 2-week dump. Now, to go back to 2020, the one thing I will point out, and I know a lot of people are saying, well, is this it? Is this the rally? Well, hopefully it is, right? Hopefully it is. The one thing to keep in mind is if we go through the next week and Bitcoin still doesn't catch a bid, like for whatever reason, right? For whatever reason, whether it's fear of the unemployment rate stuff coming out, whether it's a government shutdown, who knows what the narrative could be. But I want to draw your attention that there's a slight difference actually between 2020 and 2025, at least locally, not macro, like in terms of the overall move we've seen, but locally, the difference is that the 2-week rally and the 2-week dump, it ended the week of September 28th, right? So September 28th, Bitcoin still didn't go anywhere that week. And the problem is that that's the week we just started today is September 28th. So I know a lot of people are hoping that Bitcoin just lifts off this week, but considering it's only, we're still... This week is going to be sort of half of September, or the first half of the week is still going to be September. I just want to make you aware that, hey, if Bitcoin doesn't go anywhere this week and it still struggles at the bull market support band for a little bit longer, I don't think it would necessarily mean that the 2020 comparison is invalid. It might just mean that Bitcoin needs another week to consolidate before it hopefully can move back up. If you look at 2021, the big move back up came this week, right? But it did wick down first to the 20-week moving average. So I've had some people reach out and be like, well, what about Ethereum, right? Where's Ethereum going to go? And ultimately, I do think Ethereum is going to head to new all-time highs. But if Bitcoin does, if Bitcoin does, continue to hang around these levels, then it certainly would allow Ethereum to potentially hit its own 21-week moving average. It already got pretty close. If Bitcoin were to wick down again, it certainly could tag it. The other thing that Ethereum could do is it could just simply go sideways at this point until the 21-week EMA catches up. That's another perfectly valid option, okay? Perfectly valid option.
Cycles and credit structures are colliding in a way that puts Bitcoin at the center of two very different debates. On one hand, analysts tracking price history argue the script hasn't changed much. The market still moves in recognizable arcs tied to halvings, liquidity shifts, and seasonal support levels. On the other hand, Bitcoin is now stepping into territory once reserved for government bonds and property, creeping into the machinery of lending and collateralization. That dual reality creates a tension investors can't ignore. If price history rhymes again, the clock may be ticking faster than expected toward a peak. But if Bitcoin's new role inside the financial system takes hold, its importance won't be measured just in speculative rallies. It will be judged by how much trust banks, corporations, and eventually policymakers are willing to grant it. The story is no longer simply about charts or halvings. It's about whether this network asset can shoulder responsibilities traditionally held by the state itself. As both market rhythm and institutional adoption converge, will Bitcoin's next defining moment be marked by another predictable top, or by its survival as a cornerstone of credit markets despite the political risks that come with that status? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.